You're going to like this. The markets are up across the board. 34,300 for the Dow. It's up 270. Remember, it was up 433 yesterday. And the Nasdaq, an even better gain there, 1.6% higher, 221 points. That is a rally. Here is Michael Lee. I always like to think of Michael as the Super Bowl, because that's what he is. So here's the obvious question to start with. I like his smile, too. He's got a good one. Right, Michael, is the selling over? Is it onward and upward from here?
Well, Stuart, I first got to say I am a Super Bowl because I'm always bullish on America. Second, I don't necessarily know that the selling is over. It seems that it's over for now, but I feel like there's going to be a lot more motion in this ocean over the next few months while we address these inflation concerns. If you look and take apart the inflation number from this week, that was an absolute blowout number, which is people look at very negatively. The four driving factors of it are easily explainable. First, used car prices, which were up 10%, the highest since 1953. There's a massive chip shortage, and if you want to buy a new car right now, particularly an SUV, it might take you 4 to 6 months, which leads you to be paying far more than a normalized environment. And then you look at hotels and airlines, which are both up double digits. Okay, both of those industries have been absolutely devastated by the coronavirus, and there again is reduced supply, which will change over the next 6 to 9 months. And then the last one was rental cars, which ties back to the first one, the first three, in that a lot of these rental car companies had to sell large portions of their fleet to stay afloat, and now they can't replenish that fleet because there's a shortage of cars, because there's a chip shortage. Again, all of these problems will be solved. I think we're going to have higher inflation, but not runaway inflation. Once the market can embrace that narrative, I think we will make several new highs before the year is over, if that makes sense.
Oh, yeah, it makes sense. It really does. I mean, the Federal Reserve says that this inflation is temporary, and clearly we've got a flood of money coming into the market, into the economy. There's no question there. Let me raise the issue of the cryptos. Here you've got a multi-billionaire, Elon Musk, puts out a couple of tweets about a joke crypto, and the thing moves up 25%, and all hell breaks loose in the crypto market. I mean, what does that tell you about a financial system that lets this kind of thing happen?
Yeah, look, cryptos are still new, and they're still finding their footing. I think whenever you print this amount of money, things like cryptos are going to take a hold. I think there are cryptocurrencies with real technology, tangible technology behind it, like say an Ethereum, and then you have Bitcoin, which is your first leader or first mover that people can use as some form of medium of exchange. And just like the hackers got paid allegedly from taking down this colonial pipeline, I think. Look, whenever you print this type of money, you're going to create a lot of instability around the edges. I think the result of printing this money is hyperinflation of certain financial assets, where you're essentially pulling returns forward. So, maybe 3 years from now or 5 years from now, we'll be looking at a lost decade or two. But for the time being, stock prices are going to go higher. Real estate prices are going to go higher. But until you resolve the issues of the plumbing and the banking system, until you have a much higher velocity of money, we're not going to have this runaway inflation. But we do have things like cryptocurrency, which continue to be very volatile. And those are other, like stocks, I would be buying Bitcoin and some of these higher quality coins on the dips.
Ooh, okay. Yeah, let's save the best till last. I didn't think you would be actually buying there, but you are. All right, Mike, thanks for joining us. See you again real soon. All right, next case.
Have a great week.
The new mask rule.